Good morning, everyone. It is February the 29th, 2016, a leap year, where they add an extra day to the calendar to make up for the variance in time that has to be corrected every 4 years. We came in this morning wanting to buy the basically 25 to 30 area, 26 to 31, and we had to sell basically 50 to 55. With a 49 to 54 sell. And this was pretty typical. Well, this happened 2 or 3 days last week where nothing happens for the first hour, hour and a half. Then it breaks out. And taking out this IB high, in this case, gave you a trade where you went from 48 up to 55 plus. Very, very choppy in here. The retest failure trade. This retest failure trade worked. This retest failure trade, small winner. V-tops, V-bottoms didn't work worth a damn. This S didn't work worth a damn. This retest failure trade here, this retest failure trade there, at least a scratch. At least a scratch, and then this was the trade of the day. Even this B produced a winner. S starts to work, retest failure starts to work. S a scratch. These B's at least a scratch. These S's retest failure here. And that was done even in, this was done even in that spike in crude oil. That just out of the blue, and I found no news to cover it, and then so on and so forth. Coming in this morning, we thought 25 to 50. A close in this 37.50 area. Would be, mathematically where the market would go. So 50.55 was resistance, maybe 25 to 30 is support right now. And we've got this high volume number, this attractor up here at 38.39. So right now we got a pretty fair chance of closing in the 38 area, give or take a little bit. But the trading was pretty rough early on in the session. Trades did not develop, and it took a while for us to get to some profitable trading. Looking at the F1 screen for crude. Lower high, lower low, find a place to sell it. Looking at the F2 screen. Here's your move out of the middle. Now, K on our other split. Picked it up. This is what it should look like, and we're still headed lower. So if the market was to close right here, we have ISM manufacturing, PMI manufacturing, and construction spending. ISM manufacturing is below 50. Those numbers could come in lower than forecast. So the 25 to 30 would be buy one for Globex. 15 to 20. Buy two. On the sell side, we would be selling 35 to 40. And then 45 to 50. PMI manufacturing 51.3. ISM 48.5. And construction spending plus 0.5%. Construction spending never comes in as forecast for some reason. That one's pretty consistently below forecast. So I think fundamental support lower prices, and we've got end of the month expiration out of the way. So we'll see if we get it. If the E-mini sells, I believe treasuries will rally. And the tendency is to close the gap between the expiring month, and it doesn't usually, and these, unless there's a piece of news, it does not usually happen on the same day. It usually takes 3-4 days of trading for it just to kind of slide up. But we got a lower high and a lower low. Full point of this is based on trading the June contract, and tomorrow the 10-year goes June. And looking at the F2 screen, definitely a P. Weakness in the E-mini is taking us up. So if the market was to close right here, you can see that this 24 area, then followed 28 would be where the market would stop. So I think the trade is be a seller to failure to take out and hold this 24-28 area. Then 31 to 03. On the buy side, 9 to 13, pretty much where we were today. And if the E-mini continues to sell this afternoon, we'll put a 17 on it. I don't know. So a lot of it's dependent upon what happens to the E-mini into its close. And 1 to 5 for buy 2. Looking at the 30-year, and again 65.09. If you want a structural sell, is where you would put it. But if the market were to close right here, we'd be selling 27s to 31s and 7s to 11s for sell 2. On the buy side, 13 to 17. And then I think if we were to get through the 8 area, we'd probably head a little bit lower. 1 to 5 for buy 2. Okay, selling in the E-mini should support gold. Again, the chaos that we see in the Middle East, the Ukraine, Russia has threatened to invade Europe through the Baltic states. And that's probably not true. I mean, but it's just we hear this kind of talk that we're not used to hearing. And so we have chaos surrounding us all around the globe, and it gets worse. What's the ECB going to do on March the 10th to fulfill their promise if something big was coming in March? Probably nothing. I think they figured out that they've reached the point of diminishing returns, but I think the bigger risk for them is to do something and have nothing happen, as opposed to not do something and have something happen. So we have an inside day in gold. It's the sellers above 45, the buyers below 15. Definitely looking at a P. Weakness in the E-mini has taken us up. So 45 is where resistance is. So 44, 46, sell 1. 49.51, sell 2. I don't like the short side of this market. Like to buy weakness. 34.36, buy 1. 29.31, buy 2. Looking at crude, I think the economics, and I remember watching gold for a year where you just really couldn't get it out of the ground for less than $250 an ounce. And the market would get down to 250, then it would bounce back up to 275, and it was there for several years. And it didn't happen in a hurry. But when it finally did start to move, we and several other people, clients of mine, not me, I didn't have the gold position, got long for an average cost below 275 and thought we were geniuses when we got out of it at 500, only to see it go to 2,000. The only saving grace was they were in the gold business and they were making it on the physical side. So but the economic cost of production on average, when you go out and look and treating a field with today's service costs, it's not going to be much below $30 a barrel, except if you're in the Middle East. And that comes with attendant cost. So you can see maybe $30 minus buyer, and right now selling into 35 is where we are. Now there was today would be end of the month, and some of that big spike might have been some large player evening up their books. There was no news associated with that. So here we are. Crude oil is pointed higher. We're at 77, so 75 to 34 is sell 1, and then 34 and a quarter, 34.50 sell 2. On the buy side, 33 and a quarter buy 1, and then 32.50, 32.75 buy 2. I think we can do better than $34, but right now resistance is at $34 and we have to take it out. So 34 plus, I'd like to get it done as close to 34 as possible, and even better than that, 34.50. And looking at the euro, I think the euro is going to be run down into next Thursday, the 10th. And we get to our F1. There's been pretty good support in the 108.50 area. You can see we have this in period low at 108 even. Got value at 85. Got that 2-letter bar at 107.25. Got the bottom. Got this new move. We're below that right now. So the attractor down here is 650. And can we bust this in period low at 8 and a quarter? Right there. So 108 even, 108.50 is pretty good support. Then it drops to 106.50, 107. This market is pointed lower. Do like the short side of the market, as you well know. And we've got a fairly square distribution right now. Inside the congestion area, it's leaning P. So I think we're right where we were this morning. So 109s. And then 9 and a quarter for sell 2. On the buy side, 850 to 860. It's probably the riskiest trade. And then 8 and a quarter. And that's it for February the 29th, 2016. See you bright and early in the morning.